Okay, so this is another weekly wrap up. Let's see what happened on the week and see how our timing worked. I also this week, if you are following the YouTube channel, obviously, you'd have maybe spotted the gold examples that I did and some of the trades I did, right? Like I did the trade and I did a video immediately so you could actually see how it works under real conditions. And one of the trades, the one I did on Friday, was actually exactly during the video that I did for the members area. So let's take a look at that. First of all, let's get me out of the way here. Now, as you all know, and if you don't, you're about to know, that we've got the swing days for the week. In fact, the whole month, as you can see here. Let's just do this a little bit. The whole month, all the way into January, already posted, right? And they've been posted on November 28. So we're already done with all the posting for the month of December. So now if I want to take a look at the weekly recap, let's take a look. So the swing days were for gold Thursday or Friday, euro dollar Monday, Wednesday, Friday. Now it goes as swing days, but you got to understand we're day trading or we're keeping a position for a day or two or maybe a few days maximum, like a few days from one swing day to another. So if I've got 3 swing days, Monday, Wednesday, Friday, those days are all important because if I'm doing day trading or just keeping the position a day or two, yeah, I want to know when those days can happen. So when we're talking about swing days, we're not talking about major swings in the market. We're talking about, those specific days that are great for day trading, intraday trading, where we can catch prices at good levels at the right time. Okay, so let's just be clear on that, because somebody made a comment saying, well, these swing days didn't make a big move. And then that was a right comment, by the way. The person commenting that was quite correct, because when we talk about swing days, we're talking about like major moves in the market. But for us, these major moves are like daily intraday trading kind of days that are important. Okay, so gold Thursday or Friday, euro dollar Monday, Wednesday, Friday, Bitcoin Wednesday, Friday or Saturday, SP 500 Monday or Tuesday and Thursday, Dow Jones Monday, Friday, Nasdaq Monday, Friday, and that's it. Now with the indices, you can see I've got 3 US indices there. So what you have to do is if they got common days, you got to be sharp about it. So they all got Monday, all right? So that's one thing we've got to be looking out for. It's a common day for all of them. And then SP 500 has a Tuesday. So Monday, Tuesday for all of them needs to be checked out. And we've got Thursday for SP 500 and then Friday for Dow and Nasdaq. So I've got to make sure if I'm trading SP 500, I've got to keep Friday in mind as well. Okay, so let's take a look. These are the trading hours. Now remember, the trading hours UTC +3 is my time. Okay, I live in the beautiful city of Antalya in southern Turkey, and that's where I am. So it's UTC +3. And what you have to do is just adjust your hours. I've done a video on how to adjust your hours. You can also watch the video I did on gold. I've also mentioned it there as well. And I'll also make an additional video with that worldtimebuddy.com website as well. So this is Monday, trading hours, UTC +3. Tuesday, this is Tuesday hours. Okay, so you can just make a mental note of them because I've got them as vertical lines on my chart. So I'm not going to go back to this again. And this is Wednesday. Let's take a look at Wednesday. These are the Wednesday hours. And you can see there's a video I add daily. Normally Monday to Thursdays because I don't work on Fridays, but on Friday I made an exception because I was trading as well. That's Thursday hours and this is Friday hours. Now on some of these hours you'll see comments like this. Okay, like for example here I've got a comment, right? So look, I've said the market should push to 525. Okay, so that means I've got to be careful here. So it can push to 525. Why is that important for me? Because if I enter the trade and if I'm following this trade onwards, like this is the New York session, my afternoon, as you can see, is going to be the pre-trade session in New York, right? So if I enter a trade here, I don't want to be scared about it. I just want to follow it first of all to 525 because I've made a comment here, the market should push to there. So if I see that the market's going to go for about 2 hours in a pushy mode, and then I also know where the prices can get to, then it's really easier for me to say, okay, you know what, I'm going to enter here. I can put a tight stop loss here, and I've got the following target up there somewhere, and the risk return is okay, and the hours on the vertical scale, I can just follow it into those, and if I come up here, I can take profit or move my stop loss to the upside. If it's going to turn, the hours are 625 to 650, right? So 625 to 650, the market might turn around. So I'm thinking to myself, okay, so taking profit here is not a bad idea. In fact, one of the guys, I think Ben it was, he made a comment saying, I'm taking profit here and calling it a day. And I commented under it as well. I said, not a bad idea, because I'm looking at the book, the big book, where I've got the timing calculator and said, okay, so this is a place where where the market can turn. So you want to either take profit if you've done good risk return, just take it and go home. It's Friday. Or if you want to continue and say, look, maybe we'll go into 835 to 920, but this is looking tricky. Okay, so I can just move my stop loss and manage the trade, right? So this helps you, knowing the hours, right, help you to trade with less stress, first of all, with better money management and with better trade management. Okay, so you got your technical analysis and you got your timing, and it's really, T and T, it's really dynamite. And let's see how this is all going to pan out. Let's take a look at it. So I'll start with Friday, and then I'll move, into Thursday, Wednesday, and so on, because the swing days for gold were Thursday or Friday. And what we'd like to do is, to increase our odds, you want to trade on swing days because you get good moves then. More often than not, highly likely you're going to get a good day. And also, you could get that nice reversal, so you can enter the trade early and you can actually let a position ride. In fact, I let a part of the position ride because I had a higher weekly target. We'll see in a minute how the market turned around at those trading hours, and that didn't happen. Okay, so knowing those hours really saved my neck, basically. So this is Friday. Now Thursday and Friday, let's put them both here on the screen, right? So this is, hope you guys can see. Let me just turn this into, can I do this? Okay, so this is, what I'm going to do is just slightly cut off that end. Okay, so, and I'm going to bring my head downtown. Hopefully it will move down. Yes. All right, so let's just put me here for the moment. Okay, so you can see this is Friday. Okay, and here I've got Thursday. All right, so Thursday is right here. Maybe you just can't see it. It's just a bit cropped off. So let's take a look. Now on Friday, I was doing the morning video as well. And like I said, normally I don't work on Fridays. Okay. And normally there is no video on Friday. But if I do have time, I do it, to be helpful to the guys who are trading. So these were the first hours for Friday. Okay, and I entered the trade here during that video that I made. Okay, and that's actually published on YouTube, Friday's video. The market goes up. Okay, those are trading hours, and a tight stop loss here. Okay, with a tight stop loss, 1 bar stop loss. So it was at the bottom of that there. Okay, why? Because if we got the timing wrong, we don't want to be in that trade, do we? Okay, so a small stop loss is sufficient. Sometimes the market is a bit volatile and it's choppy. And it does take a stop and then it goes in our direction, but that's just part of the way. It's just how this market is. All right, so we have to accept those things. So the market went up nice and easy. So that was on live as I was doing the video, and I hope that helped all the members. The second thing was I did another video immediately after I entered the trade here on Friday, just to demonstrate again, we can have a low, we can have a tight stop loss at the low here, and can actually follow this to the next trading hours here, right? So that worked out really well as well. Now, the reason is my bias was to the upside, wasn't it? Because it was Thursday or Friday, we were expecting a swing day for gold. So if we take a look at the daily, okay, here we are. I said on Friday's video, I said, guys, I'm happy to go up with this because the market closed higher on Thursday, making me feel that going to the upside is okay. All right. Now, as you can see, the market closed lower. So you can argue that, hey, I was wrong. Yeah. But think about it for a moment. If we know the trading hours, even if I get my bias wrong, even if I get everything wrong, if I understand, right, let's get back here, the hours. So if I understand the hours are correct here, I can push it up, take profit. If I understand the correct hours, I can say, well, I'm not going to enter the trade here somewhere. Okay, I want to enter at the right hour because I want to catch the drive. Okay, I don't want to enter somewhere here and be biting my nails. Okay, I want to enter here, put the stop loss, and then I want to say, okay, you know, the next time I'm going to check, the market is going to be at these trading hours here, and I'm not doing anything else. That's it. And that is stress-free trading because you've got a tight stop loss. Your losses are going to be very minute compared to your money, all right, compared to what you're doing, what you're making in profits. And look, the market falls there with a huge fall. Trading hours, again, obviously I wasn't trading these anymore after that big fall because it's Friday afternoon already. It's like, for me, it's like night time here, okay? Because these hours were, what was it, 8:35, 9:20 my time, and that's in the evening, so I'm not going to be mucking around with the market. But, you know, even though I could be wrong on a swing day, getting the hours right, the pricing right, and following it makes a lot of difference. So let's get rid of that. So that's Friday. Okay. So let's take a look at Wednesday. Well, let's take a look at Thursday. Sorry. Why I got Thursday here as well. Let's do Thursday. All right. So this is Thursday. Now, I also said Thursday can be a swing day, but it's a bit of a drama. Why? Because we're in between levels. Ideally, where I'd like to pick this up would have been if the market came here. In fact, I specifically marked that zone, right? When I was doing the technical analysis, I said, guys, wouldn't it be great if we ended up down here on a Thursday or Friday because we'd love to get in, okay? But that didn't happen, okay? So it was a bit tricky. So on Thursday, there was really two things that could happen. Okay, we said it's a swing day. Well, we're either going to catch a high or going to catch a low, but we don't know. Okay, and what gave us the bias to go to the upside was, well, this closed higher. So if that closed higher, I was happy to go long on a Friday, knowing the swing hours and knowing the good hours to trade was on our side. It's a weapon that we have that other traders don't have. So let's get rid of that. Let's get back into Thursday. Okay. And if we did go long on a Thursday, what would happen? Well, let's do that again. Thursday, look, these are the trading hours. Market moves to the upside to this trading hour. Okay. Obviously, because it's a swing day, we want to have a direction in the market. We don't want to be mucking around. If it's a sideways market at trading hours, I can buy the low, sell the high. And this is why in many of my videos, you'll hear me saying, guys, trade on the edges. Okay. If you trade on the edges, then going up from the lows is a option. Now this, for example, okay, would have been okay to go long. Okay, would have been okay to go long as well, but we're right in the middle there, and we don't know if Thursday is going to be an up or a low. Okay, because it's a day that's going, it's a sideways market. And this is why it was a bit tricky. This is why I actually wanted to come down on Thursday and Friday into that zone that I marked on the daily so that we could actually, trade off that. So that didn't happen. So the market goes up. Look, again, trade hours here. The market chucks a UE to the downside. Trade hours here, market starts to pick up, but no excitement at all. And then that comes into the Friday where the market takes off, and this was the entry for Friday. Okay, so Thursday overall it was a bit messy, but if you sold the high of Asia, which is there, on a trading hour, you still would have been okay. You would have been okay, because what you want to be doing is trading the edges. If I was to do this, let's do this. Come this way a little bit. Okay, into Wednesday. Let's see what happened on Wednesday. Now, if you're intraday trading and you say to me, well, Marty, I trade intraday, and whether it's a swing day or not, how am I going to do it with the hours? Only just, just trading with the hours. Well, this is Wednesday, right? As you can see. So what can you do? What do we want to do? We want to always trade on the edges. Okay. This is Wednesday. Now look what happened here. The market sells at a trading hour here. Okay. Market comes back up on a Wednesday. This is Wednesday. Let's do this as a square. So this is Wednesday. Okay. Market comes up into trading hours and then they sell off. Okay. So you could have done that as a intraday trade. Now this is London pre-trade session. Then we have a trade hour. Market goes into New York. Okay. Again, trade hour. Market sells off. Trade hour, market sells off right into the last trade hours of the day, where it starts to pick up a little bit. Okay. And that's your Wednesday. By doing what? By doing something simple. Selling the highs. If you're going to sell, if you want to buy where they bought before. For example, if you bought here, you would have been okay. Why? Because this is where they bought. So you're thinking to yourself, well, wait a minute. This is a buy zone. This is the cause for the breakout. What breakout? That breakout. So if it comes down here and it's a trading hour again, buying is okay, and you would be in the money, and you were in the money. All right, and that's a Wednesday. So let's get rid of that. Let's see what we've got for Tuesday. All right, so this is Tuesday. So if you were doing intraday trading again on a Tuesday. So let's see, it's the same mentality. Look, let's do that. This is Tuesday. Look, Asia. So Asia sells. Okay, Asia sells, London sells. They both sell. Okay, market comes up. This is New York. Trade hour. New York, big sell-off. And that's it. Now, here could you have bought? They bought here before. You could have. Because that's it. If you bought here before, your stop loss should have been just under that bar there. And your first target needed to be this low here where the breakout happened. Okay. So obviously a bit of technical analysis is necessary. But look, where else do you get timing like this? Right. So you enter the trade. If you went with it, fine. You would have covered that trade. Goes to Wednesday. And that's Wednesday Asia session. So when did they sell? They sell where New York sold before at the trading hours. Bang. So this is how the whole week is working out. So once you got those levels, you can see the technical analysis needs to be practical and simple without, without all this messing with your mind stuff. Okay. And that's basically how it is. Let's take a look at Tuesday. All right, let's take a look at Tuesday. Let's see what happened Tuesday. Here we are on a Tuesday, right? Yep, that's Tuesday, and this is where Wednesday starts. So let's take a look here what happened. So that's on Tuesday. So here we are. Look, here, this is really not a great place to trade. Why? Because the market sold here at trading hours on Monday, sold all the way into here, okay, and we don't really have anything. Let's see if we do have anything from before, because when Monday opened, let's see, this is Monday, okay, no, because the buys were here, as you can see, okay, so this was where the buy was, so the market bought here, okay, it wasn't a trade hour, as you can see, the trade hour was here, the market had already gone up there, and these were trade hours for Monday. Let's do that. This was a trade hour for Monday. It's a trade hour for Monday. So from here, the market stop sweeps London. That's your stop sweep. That was a trading hour. You might have gotten stopped out if you shorted here. Okay. And then the market comes down back into the equilibrium. Right, back into the equilibrium. And this is the opening price. So market comes back into the opening price for Monday. Bounces up. This is the trading hour, but the price has already gone up, so there's nothing to do here. Here, could you have sold? It's a bit iffy because they sold here before. You see where the market sold off? Okay. Now, these are not the best options, but they are an option because it's a place where they sold off before. So what you can do with such situations is use a lower volume size. You always want to grade your trades A, B, C, right? 3 types of trades or 2. Either it's an A setup or a B setup. A is a great setup. B is a half great setup. It's still good, okay? But, you need to be a bit more careful with your volume. All right, because with the A setups, you can actually enter with a good volume and you can really stack up your account. With B setups, what you can do, they'll be like your pocket money for the weekend kind of thing, and then you can just go in with a smaller volume and make a bit of a side dish. And if it goes pear-shaped, then it's not a big deal because your volume was lower. Okay, so as you can see here as well, market then going into Tuesday, selling off here. Now this is not a bad spot in terms of like this. You need to think of it like it's not an A setup, but the market breaks down. Okay, you can see we've broken structure here. Then it goes back up, okay, for a retest of it. It's called a good buy kiss when we're trading. And then the market relaxes a little bit. Not a big sell-off. This is again Asia. Asia afterwards just slaps it down. This is London joining the party. Let me move this up a little bit. Okay, let's start over. So Asia, sell-off, Asia, sell-off. You can see they're both at trading hours. Knowing these hours, this is why it's so important. You could say, wait a minute, they sold here a little bit. Maybe I can sell again. It's a trade hour. And look at that. London, again, like I said, joins the party. I didn't have any hours here at all, so I didn't have a reversal. Market comes back up to where they sold before, and it's a trade hour. Well, look at that. And then New York says, I'm going to have a bigger party. And that is when they push it all the way down. And then this is a place where they bought before. So once the market is up and down, right there is where they bought. And look, that's a trading hour. Right? If you went short down here, definitely you would have taken money off the table for sure. At least here you would have covered your trade, moved stop forward, take profit. If you're day trading, you would have been taking profit in any case. All right. And that's Tuesday. What about Monday? Over Monday. Let's see. This is Monday. All right. So Monday opening, right? This is where the market opened up, goes nicely to the upside. This is a trading hour, okay? Nothing to do here because the market's gone up. The only thing you can do here is, look, this is London, okay? Now remember, Monday is not a swing day, okay? So a bit more risky. Monday, market sold here. Asia sells here, down. London comes up, they sell off, but not good enough. Goes up into New York, and then New York does a stop sweep London, stop sweeps to London, and then falls. So this was overall a tricky day. So if you sold here, maybe here you would have been stopped out. Okay, probably stopped out, not maybe, definitely stopped out, because we're using a tight stop loss. Okay, I'm using a tight stop loss anyway. And here as well, if you entered in the New York session, and if your stop got, stopped out here because of that squeeze New York did, then you would have been stopped out here as well. If you entered the trade long here, it would have been a bit off. Okay, it would have been a bit off. Why? Because the price where they bought was down here. Okay, so if we were down here at an opening price at trade hours, that would have been a better entry. Okay, and that's basically it. And remember, there were no, like I said, there wasn't any swing days for that day. Let's do that. Let's do that. Let's take a look at euro dollar. Right, let's see what we're going to do euro dollar. So with the euro dollar, the swing days were, let's check it out. Monday, Wednesday, Friday. Okay, so look, here we are. Let's do this. This is Monday. All right, so Monday is here. Where are we? Let's do this. So this is Monday. Market closes to the upside. Now with the euro dollar, we are bullish overall for the mid and long term, but we'd like to see it come down before we go up. Okay, and that's your Monday. Now look, Monday market breaks to the upside. They still sell off at the highs, but it closes high. And this is already telling me, okay, don't stand in front of it trying to sell this off. Let's wait for the next swing day, Wednesday. This is your Wednesday. Market makes a high. Thursday, you sell. And Friday was also a sell-off. On Friday as well, I said you could sell this as well. We can push it down. But I did mention we are actually bullish on the euro, okay, simply because of the previous technical analysis methodologies that we used, okay. If you go to the weekly, and in fact, if you go to that MetaTrader 4, can I put this up here? Let's go and let's see if I can. This is MetaTrader 4. If I go to the euro dollar, I will show you if it does go to the euro dollar, because it's a bit cheeky, this one, where we actually went in, and you'll be really interested to know it was actually a swing day, swing hour, and the price, and then it was on a monthly level too. It was like, boom, it just took off from there. So let's see how that pans out. All right, MetaTrader 4 not being very helpful to me. Not a problem. But it's worth taking a look at, because I did have a trade there on a Thursday. Why? Because Wednesday was a swing day, market made a high, closed high, and then I said, okay, fair enough. So Thursday we can sell the highs, okay, to push down, and at least on the intraday, that should still be okay. Intraday trading, day trading. Let's do that. Let's take that out. Let's go on to the 15-minute chart. Now on the 15-minute chart, this is Thursday, and my trade was here. Where was it? It was like here, right? So the market went up. Now I didn't get stopped out here because the stop would have been above that, right? So actually on I think, was it Friday's video? I actually showed that on Friday as well. And then what happened? The market came down. Okay. and I had to take profit right here, which it didn't hit. It just missed it by a point or so. Okay, and that was like, you know, so I had to close that manually later on when I woke up. But what can you do? It was just like, it was actually right on the edge of it. So that went down well on a Thursday, right? Why? Because Wednesday the market closed up. Let's get rid of all these. So market closes, Thursday you can sell, all good, all right? And that's your day trading. Now the next swing day on this one is Friday, right? So if you go to the daily again, and let's take a look, this is Friday. So because we are up again, the market's up and we sold in. So what we want to do is, if the market goes up, we want to sell again. All right. You don't want to be just selling at the low of Thursday, because that's not a good idea. You want to go back up, retrace, and then sell off. Okay. You don't want to be selling cheap. So if I go back to the 15-minute chart, there are two places to get sell here on Friday, and one of them I did and I got stopped out. Okay, what was it? This one. Here we are. On Friday, that was actually during, when I was looking at the market as well. The market was up here, so let me sell this off too. Why? Because I had sold there all the way into there. So selling again was okay, all right. But as you can see, the market went slightly higher, which is fair enough, not a big deal. I actually anticipated it could go higher. Why? Because if you watch my technical analysis videos all the time, I talk about the gaps, okay? And I do say, guys, if you're going to sell, sell it there, all right? Now, if we take a look at that on a Friday, did I have any hours there? No, I didn't have any hours at that zone there, okay? Because that was like, what was it, 9:30 in the morning. So I didn't really have anything there. These are the hours here, as you can see, okay? And those hours, as you can see, just market goes up into those trading hours, and look what happens. So if you bought here, you would have done the right thing. Why? Because this is where they bought on a Friday, right? Asia bought, took it all the way up there. Market comes here at trading hours. In fact, when I was doing the video for gold, euro dollar was there. So I said, see, this is not a bad place to get in. Until where? Until here. Why? Well, you got to cover your trade here, because that's the next trading hours. And look at that price level. Just go to the left. This is where they sold off. Okay. So what happens? Trading hours. If you bought, you know you got to take profit or you'll move your stop losses higher. Bang, market goes down. Comes back into this trading hour again and sizzles down. Obviously not a good time to trade. Friday late afternoon, nothing to do unless you're scalping the market. And that's not really my cup of tea. Okay, so that's that. What else have I got? Let's take a look at Bitcoin. Let's take a look at Bitcoin, shall we? Now with Bitcoin as well, what do we have? Wednesday, Friday or Saturday. So if I go into Bitcoin here, let's do it. This is daily chart Bitcoin. Here we are. Wednesday, Friday, and I specifically said we should be selling this down. Now today is Saturday. I don't have the weekend on this chart, but I've got it here. Let's take a look at Bitcoin here. Where are we? Oh, it's here. Okay, so here we are. All right, so as you can see, it's a swing day. I've kind of marked it in. And this is the euro dollar. Okay, we need to get back onto the, yeah, here we are. All right, so this is also logical trade to go to the downside because we're the Wednesday swing day, right? As you can see, that's your impulse flag, okay, market doing an ABC, you're on the upside, sell to the downside, Okay, and that's all you really had to do. Okay, so Wednesday swing day here, Friday also down, and today's Saturday, so you have to be careful. Why? Because Saturday, if the market is down, like this is Saturday now, if the market is down, then it could go to the upside. Okay, so you want to make sure on Saturday you're careful. If you got a Friday sell, you should have taken your profit already, and that would have been the case. So let's take a look at the hours. I don't think I've marked in the vertical lines for Bitcoin for the hours, but it's just going to be straightforward. All right, so here we are. I have actually, okay, so Asia, look, very nice and very easy. This is Wednesday. All right, Wednesday market makes a high. Thursday they sell off. These are the trading hours for Thursday. All right, just like in the euro dollar example, Wednesday was a swing day. It made a high, it closed high. Thursday the highs, good time to sell. So if you take a look at that, that's your Thursday trading hours there, not the highs of the market, but you're still in a zone. Now, if you block this, what do you have, right? You have a place where Asia sold, Asia bought, Asia sold, and this is London. Is it London? No, it's not. It's still Asia. Okay. Here we are in London. It's trading hour. Pretty much the highs off that block. Market selling down. This is New York. Look what's happening. New York comes down. This is New York. It retests the edge of the block. It's a goodbye kiss at a trading hour. It's at a trading hour. And then bang, we're to the downside. Now, if you enter here, your stop loss just needs to be above there. It doesn't need to be too far out because, like I always say, if you got the hours wrong, you don't want to be sticking around. If your price and time are correct, you don't want to be mucking around and putting a big stop loss, because that's how we can minimize risk with time and price. What's the point if it's not gonna help me out? So that same block, let's just come back here a little bit. Why is this not doing it? Here we are. This is Thursday, right? So the same kind of thing here. New York does the goodbye kiss on the block. London selling first. Then New York sells off. Now look what it's doing. It's coming back to the edge of that block. On Friday, that's Asia session. This is London selling on the retracement. New York trade hours nailing it to the downside. Let's do this. New York, let's get rid of that. New York, here we are. Oops, no. New York trade hours, sell off. New York, sell off. And that's basically it. So as you can see, if you put your time and price together, you can pretty much fix this all up. Now, should we take a look at the indices? Let's do so, because let's just go into the indices for a second, because I'm covering SP 500, Dow Jones, and NASDAQ, and let's see how these are going to look. And we might as well do it. Now, the swing days for SP 500, as you know, Monday or Tuesday, and then we've got Thursday. Now, because we've got Thursday and we've got Friday for Dow Jones and NASDAQ, so this is Thursday. Okay, and this is Monday. You see on Monday, market pushes down, nice and easy. Okay, SP 500, Monday, Tuesday. Monday pushes down. Tuesday, market pushes up. Now, this should be a wake-up call for us immediately, because I've got 2 days, Monday or Tuesday. So Monday, bang. Tuesday, from the low, market buys. Okay, so this is a bit of a tricky situation, because on Tuesday you could have decided to sell as well, and that's fine, because we're at the highs. This is where they sold off before, so selling is okay. All right, if you sell, obviously where you should be selling, right? This is the zone. So if it matches the hours, great. So just check out the hours, and then you can put them on your chart and see how that panned out. Remember, with the indices, best times to trade US indices is in the US hours, right? So that's it. And this is Thursday and this is Friday. So remember, NASDAQ and Dow Jones has a Friday. So by default, I have to keep an eye out for Friday NASDAQ as well. All right. So I have to, so Friday SP 500 as well, because of Dow Jones, NASDAQ has Friday. So if this thing doesn't sell, we don't want to be in there on Thursday trying to sell it, because Friday is also on the cards for us. Okay. And that's that. So let's take a look at Dow Jones. We had Monday, Friday. Look, that's your Monday. And I did say on Friday you could sell this as well on the highs. Here we are. Okay. Friday. And I talked about this level 2. As you can see, I've got a line there. Why? Because it's a gap fill. So the market heading into this zone was like highly likely, and that was a place we had before. So Monday, market sold off to buy into that, and you guys knowing that could have also gone long on that. Once it breaks out anyway, you know where you're going. Okay, so when it breaks out the high of the previous day, you know what your target is. So following it into Friday was the way to go. And selling the highs is also, like I said, this zone was a sell zone. The minute it entered that bar, you're in the sell zone. NASDAQ, let's take a look at NASDAQ. Here we are, market makes a push down and then goes into there. And remember, this zone was also a sell zone. It's a zone I marked in. I said, guys, the market will target this. So if you want to buy into it, you can buy into it. That's as easy as that. So this has been a bit of a long wrap up, but it's better to know what's going on rather than, taking the time to learn and to understand how we can use this, I think, is worthwhile. A lot of people just watch a few minutes of a video and then take off. Obviously, they're not giving enough importance to their performance or how to better themselves. So I like to make sure that everything is honky-dory, and whatever you're trading, you got to have your targets. Remember, swing day and price, when they go together, you got a bingo trade. So if you understand this is a price zone, okay, if you know that that is where the market can be going, okay, and this is a Friday swing day, we're going to get there on a Friday because Friday is the swing day, right? And then if the market is going to the upside, then great, because now you've got a blue bar, then you know you're going into Friday. So any pullback is a reason to go into Friday. See what I mean? And especially if you've got the targets, then you are doing just fine. Hope that helped. A bit of a long wrap up. Sorry about that. But better to cover everything than not. Have a good